I asked my CPA, I said, all right, I'm doing all these interviews. So can I write off some Botox? And he said, no, Jody. So let's get real. Let's talk about separating personal and business expenses properly. Like I could defend that in a courtroom, right?
Yeah,
I could be like, listen, one of my business expenses is Botox. Do not mistaken. Don't make a mistake here. But of course, there's a fine line when you talk about like what is necessary for your business, right?
yeah, Jody, you could try to defend it in court, and you probably would not win that one. Unfortunately, I'm sorry to break it to you, but we see this a lot. Business owners tend to look at their business as an extension of their personal checking account, and so very often they tend to commingle. Big no-no. We really don't want people commingling because of a lot of reasons. The first is it's hard to keep track of the expenses when you have a lot of personal things going through and you're paying for this and that all through the business. And it's just an accounting nightmare. So we really try to encourage people to separate as much as possible what's business and what's personal. Again, if you're not sure whether or not something is deductible from a business perspective, you might want to ask your accountant on it. Or, QuickBooks has this neat little account here, ask my accountant, throw it in there, and then have a discussion with it. And then we'll help you navigate through whether or not it's something that can be defended as ordinary and necessary to support the activity. But, we get this a lot from on-air personalities, and we have a number of YouTube and TikTok clients and so on and so forth. They want to deduct everything from their clothing and hair, hair and makeup and all those things. Right? Clothing is a big one. Clothing, you can deduct it if it's logoed and has your logo on it. If it's something that is only used for the purpose of being on the video, like you can't deduct nice clothes or business suits and things if it can be used for other purposes. So we get that a lot with on-air personalities. There is a fine line on kind of hair and makeup, and that can be defended in some circumstances. A cosmetic surgery, not likely, because it's really something that's more personal in nature. So that's one that, again, it's an area that needs to be navigated, but in most cases, we're going to lean toward probably not deductible for on-air TikTok and YouTube video creators. It's just something that you just got to bite the bullet on and pay for personally.
Listen, this part of our conversation today, there's a lot of feedback. Can you still hear me good?
Yeah, I can hear you.
That feedback ended, I think. This part of the conversation today is going to go viral because there are so many content creators out there. So questions like this are so vital to know. For instance, when I worked in television, right? Those were items that were part of my contract. And so now that I work from home and I'm a content creator, of course I'm going to question like, hey, tax guy, can I put all these things in? But I think what you're saying is the best way to deal with this is to have two separate bank accounts.
Oh,
Because
absolutely. Yeah. So you should always, when you have a business, always have a separate bank account. Don't run it out of your personal account, and even credit cards as well. If you can get a business credit card in the name of the business, that's the best scenario. If you can't, for whatever reason, a lot of times for startup businesses can't really get credit cards in their business name right away. What we recommend is you take one personal card, or maybe a couple if you want different bonuses. Some people like to get points, so on and so forth. Take those cards and use them like they were a business card. Only put business expenses on them and don't put personal on them, because number one, your accountant's going to love you better, because doing the record keeping and only looking at one bank statement, not having to figure out if you took a trip to the grocery store, whether or not it was a business expense or what have you, we're going to like you more. So it just makes the record keeping easier. And if you're ever audited, you certainly don't want the IRS looking into your personal bank accounts, right? You can throw up that wall and say, okay, here's all the business stuff, and here's the accounts, and here's what we did, and keep it separated. So that is one of the first things that I advise a prospective client, not even a client, is that if you don't have a separate bank account, you should, and run it separately, keep it separate. It can be at the same bank, and you can transfer money back and forth, because those transfers can be easily dealt with from a bookkeeping side. But don't run your business account like a personal account, or vice versa, because it's going to be a mess. The other thing that is a challenge is most people that don't work with us may only see their accountant once a year, and they bring them all of the statements and receipts from the entire year. And if you go back and try to remember what you did a year ago in an account, whether or not as a particular line item was personal or business, you might forget. If you have the separation, you discipline yourself to only put business expenses in those checking accounts, then you're going to know it's a business expense. And then you just got to figure out what it is exactly, right?
It's so true because you can click those Amazon buttons 100 times a day and who knows, like
I'm totally guilty of that. I have
you
a
do.
lot of Amazon purchases for business and personal, and they all go to the different credit cards. And I have to remember that when I'm ordering on Amazon, okay, this is going to the right place. And even I have different properties, so I can make sure it goes to the right property too, right?
You're a great example of what not to do. Get your own business Amazon account.